Well, hello everyone. Welcome to Short Verticals. My name is Barbara Armstrong. I'm a coach with Schwab. Delighted that you've carved some time out of your day to join me in this discussion on a short verticals. So, without further ado, let's get through our important information so that we can get out to the platform. As always, we always have a lot that we're trying to cram into our 45 minutes together, and we're going to look at both new trade opportunities that we might choose to take and some that we might choose not to take, and walk through the rationale behind that. We're going to look at a little bit of trade management as well and what that process might look like on a day-to-day basis. If you are not following me in the land of X, I would like you to invite you to do so. It is free, and I'm posting content there on a daily basis that you will hopefully find informative and helpful. My handle at Barb Armstrong CS. Okay. And Kevin Horner is also on X, and you'll want to follow him there as well. His handle, Kevin Horner CS. And so Kevin is riding shotgun in the chat today. He's a friend and fellow coach, and he does understand these strategies. So if you have any questions between Kevin and I, hopefully we've got answers for you. If you're watching this in the archives, as the majority of people do, you can type your questions in down below, and I do look at those on a daily basis. And one of the questions that came in yesterday was, how can you run through how to do those scans to create sector watch lists? And so you're going to see a mini session post in the next day on that. We do read those comments and we do respond to them. Hey, just before we get going, I'd like to review the fact that options do carry a high level of risk and aren't suitable for all investors. You have to apply for option trading privileges with Schwab, and not all will qualify. Also know that we use the paper money Thinkorswim desktop application, which is for educational purposes only, but it looks like, smells like, feels like real money. There are some nuances and differences between a live account and a paper money account, but it is a great way to become familiar with the platform, become familiar with your trading strategy and all those good things. One of the differences, and the most important one for us in this class, is that short options will never be assigned early in paper money, but in a live account that can happen. And it behooves us to be aware of the fact that that can happen. And the further we are in the money on these things, the higher the probability or the higher the risk of being assigned early. And so we don't get to practice that in paper money, but we do get to talk about it. And I think that's important too. So we are going to start by going out to the Thinkorswim platform. And, as always, what we tend to do in the beginning is we have a look at what's going on with the indexes. And so we can see that the S&P 500 pulling back just a smidge today, but within the last week, it hit a new all-time high. It's up 27% year to date. This is a 9-month chart. If I make this a year-to-date chart, it's hard to characterize this as anything other than bullish, right? Right. So S&P 500, pretty darn bullish. The NASDAQ has now pulled ahead by just a hair. It's up 28.8% year to date, and it hit a new all-time high yesterday. So there we have it. So again, bullish. So 2 ticks for the bulls. Yeah. How about the NASDAQ? And this one, the Dow. So when we look at the Dow, it's been kind of pulling back for the last week or so, but it hit a new all-time high back on December 4th. And even with 6 days of pulling back, it's pulled all the way back to the 30-day moving average. So pretty bullish, up 16.7% year to date. And, just a steady uptrend, right? Right. So that's 3 for the bulls. And then when we come to the Russell, which was going a whole lot of nowhere for a very long time, it too is up 17% year to date. And, like the Dow, back on, this one was on November 25th, hit a new all-time high for this index. It has been kind of consolidating since, come down to about that 30-day moving average. So the bulls clean sweep. And, when we look at the VIX or our volatility index, it's still sitting there below 15, which puts it in the very low end of the range that it's been trading in this year. And certainly at the very low end of the range of where it's been trading since July. So that would indicate, a fair degree of confidence. Now, if we come over to our gadgets and we look at our public watch list and look at our sector indices, as we often do, we look at who's been the strongest over the last 3 months, and that's consumer discretionary. So the Amazons and their kind, it's the car companies, et cetera, communication services, financials, and technology. They have been leading. And if you want to see consumer discretionary hit a new all-time high, that would have been yesterday. Communication services hit a new all-time high yesterday. Financials hit a new high back here at the end of November and has now come all the way back down to what? The 30-day moving average. Do we see a theme here, my friends? And then technology, it hit a new all-time high in the last week, but we've seen a little more, I call this an angsty line. Like it has a lot of people, I think, in this last couple of months, with the tech sector, there's been some twisting of the knickers, so to speak, where, it's not just been marching straight up the hill, like we've seen more so, since August with the consumer discretionary sector, or even with the communications sector over the last few months. It's been a bit smoother a ride, shall we say. But, that notwithstanding, you're within a stone's throw of your all-time high. Let's not throw the baby out with the bathwater because there have been some, hiccups along the way, right? Right. Okay. And in the last month, and why do we look at this? Well, you might just say, hey, are things continuing as they were? Or like what? Consumer staples has snuck into the mix. After consolidating and pulling back to this, the black line is the 100-day moving average. It seems to be, rising again, certainly in the last month, right? Yeah. Kevin, one of the things I love about Kevin Horner, he always makes me laugh. So if you guys aren't here live watching the commentary, I encourage you to check out a live class someday because you're bound to be entertained and you'll learn something along the way and you get to ask questions, kind of as we go. Okay. So somebody asked if we could look at, and let me just scroll up in the chat. Could we look at doing an earnings trade? And we don't tend to do a lot of earnings trades in this class. And why is that? Anybody care to hazard a guess? Go ahead and type it into the chat. Because I know that there are a lot of coaches and a lot of people or trades placed on earnings. And why would we consider doing that? Well, because just if we come to the trade tab, so we can see that the volatility for options expiring tomorrow is super high. And why is that? Well, because earnings is coming. So volatility right now on this is high. And so we have the advantage of taking advantage of that volatility. And Sandy's comment is, but it's just a coin flip. And here's what I've found, my friends, is that when I've done earnings trades, and maybe like my brain just isn't wired the right way, but who was it recently? And I guess I must have moved my notes around because I do always have notes. We just had somebody come with earnings. Oh, Oracle. Was it Oracle? Yeah. And Oracle, like it wasn't like catastrophic, but it gapped down about like 9%, even though like, it may have had an earnings beat and what have you. And if your short put vertical was somewhere in here, you've now immediately got a max loss in spite of the volatility crush. And so if we come and look at something like, and Oracle had gapped up on the last earnings. So if you're going, well, if we look at the last earnings, it had gapped up and it's just kind of been meandering up the hill. So as opposed to, if we look at an AVGO, we could get richer premium, but this is what I call a TUMS stock. And what do I mean by that? It's like, if you own the stock or if you were trading this from an options perspective on anything other than a very, very short-term basis, you could be suffering from a lot of indigestion, and eating a lot of Tums, and now we're coming into earnings. And what happened on the last earnings? Well, it gapped down on this one, gapped up on this one, kind of gapped down and then kept falling, like just as the immediate aftermath. And we tend to look at something in that 20 to 50 day time range. And so I look at this and think, no, I have no degree of confidence. Yes, am I confident that there's volatility and that we might be able to take advantage of it? But do I have looking at the technical analysis? So here's me looking at the technical analysis, and this may just be me copying an attitude, like, because I've been known to have one on occasion. But somebody, said, hey, well, what are you thinking? Well, I'm thinking, like we're seeing, it's not drastic, but we're seeing lower highs here. And then we've got like all of a sudden this move to the upside. And some might say, well, are you kind of looking at it as kind of, we have maybe this downward wedge happening. But I don't look at this and think this looks like it's moving to the upside. Now, I could be wrong, and I'm wrong frequently. But I don't look at that and think, I think this is one I want to take advantage of. And it's not a recommendation, because this could gap up tomorrow and you could be going, snap. Why did this is just one opinion. There's thousands of different opinions out there. Thousands of different opinions out there. But my track record of success on doing these earnings trades with short verticals. Now, what's the other thing that, when you talk about getting your knickers in a twist, is that, so let's say if we thought, okay, could I come down to like this 170? But, really, what's the difference? Like, I mean, this 30-day moving average hasn't been acting as support. I highly doubt we could come all the way down to the bottom of this channel, like around 160-ish. So where would you even put your strikes? Like, I don't even see a support level. But one of the things, if you do a $5 wide strike, it's typically, and sometimes we get juicier premiums, especially coming into earnings. But if our strike is $5 wide, often that win-loss ratio is 1 to 4. So we might be paid $1, which means we're risking $4. And even if we're risking, if it's $2 wide, 2 and 3, it's very seldom that, with the way we try and structure our trades in this class, that we aren't risking more than we can potentially earn. And when we put that in our hat and shake it along with a lower degree of confidence on direction, and some might say, well, I wasn't actually thinking about a short put vertical. I was thinking about a short call vertical. Well, and you know what? The same kind of logic applies, because from this chart, where it came up, hit this resistance level, and then we have an inside day to day, that's considered bearish. We could maybe do a short call vertical. Okay. And so let's put one on, and we'll put one on and we'll put a chat in the notes. Like we'll put something in the notes. Could we come up here and I don't want to do the 180 because that's, it's trading at 180. Could do like the 185, 190. And then our expectation is that this is not going to gap to the upside, and this is a stock that is up 61% year to date. So, and the market is uptrending. And AVGO, this is a communications stock, right? Actually, let's double check. So, it's a counter trend trade if we do that. So come to the Analyze tab. Oh, it's a tech. It's in the tech sector. Okay, so let's come to the trade tab and say, could we come out? And we don't have to come out one day. We could come out, 3 weeks and say, could we sell this 185? We've got lots of volume here. Now, volatility is still high even out here, and we're likely to see some volatility crush, but it's highest here. But then either this trade goes the way we want and we have a profitable trade, or we take our max loss and there's no time to recover if we go to one day. So if we look at this 185, 190, and we're looking to sell a vertical, we get paid $1.77. So that's closer to that 2 to 3. So the most we can make here is $1.77, and we tend to put our exit in at, if it's 20%, if we've got 80% of our max gain, we're out, and we could lose 323. Now, in our trading a smaller account, we don't want to risk more than 500, so we do one of these. Okay, so we are going to put an exit in just in case it moves dramatically in our favor, and we're able to get out. Well, we're still, depends on where you live, like whether you might still be sleeping or out for your, morning walk or doing some holiday shopping. So I'm taking that 17 and multiplying it by 2. So we've got 35 cents. We're going to make this good till canceled, confirm and send. And this is an earnings trade to take advantage of volatility. Okay. And it is bearish. So it is a counter trend trade. It's counter to the market and to the sector it's in, because the tech sector's been uptrending. And it's counter to the long-term trend on the stock. So it's looking at the short-term trend. Okay. Yeah. And so Andy, what this is a bearish trade. This is saying, I don't think that this is going to gap up on earnings. I think that given the current short to intermediate term pattern on the chart, that it's bumping up, looks like it's pulling back today, that, this shorter, and by shorter, this is a pattern that's been setting up since the beginning of October. Yeah. Now some might say, well, isn't this short-term trend up? And yes, in the last week, it has been up. But when we look at this intermediate term trend, and like I said, like this is a Tums chart. This is this thing has been all over the place, up and down. So you might just say, yeah, I'm not going to play. But when we look at the 1-year chart, the overall trend has been up. Okay. Yeah. So I'm looking at this pattern here where we're seeing a series of lower highs. as a bullish trend, I wouldn't know where to put those verticals. So we'll see. And like I said, say, yeah. And Andy saying, I'd sit that one out personally, but we're here to learn, right? And so this is an example trade, and it's an example trade that the majority of you might say, I'm not going to do that. Well, I mean, in our example trading plan, in the example trading plan I created on the, let me just bring it up here. And so you'd have to have a different example trading plan because, if you subscribe to the channel, this is the trade management mini sessions. And if we scroll up to the top, here's an example trading plan for short call verticals. And then here's one for short put verticals. And as part of this example trading plan, and you can have multiple example trading plans for short verticals or long verticals, you could say like part of these trading plans is thou shalt not place this trade over earnings. And so like this is, I think, the first trade I've done of a short vertical over earnings, perhaps this year, that it deliberately was done that way. And because typically following these plans, we're trying to trade this in a conservative way, get, with a short put vertical, I'm going to speak bullishly now, with a short put vertical, we just want to have things aligned for the highest degree of conservative success. So here's another stock now. Here's Boeing. It's been downtrending, and it's kind of downtrending all year, hasn't it? But what we've seen recently is that it started to consolidate and it's breaking out. And so would it be a counter trend trade if you're saying, well, if I look at this company and it's part of the industrial group and we look at the industrial sector, the industrial sector is up 20% year to date, and it's been pulling back, like some of the other sectors have recently. But if we come back to Boeing and we say, this could be a trend reversal pattern setting up. Now, could it come back down? Absolutely. But where would we want to put our strikes? Well, below this 160 level. And so if we look at this and we say, okay, well, could we perhaps sell something around this 162? And we want to come out at least 3 weeks here. And even on the weeklies, our choice is 165 or 160. So if we come and we look at this, we say, well, I don't really want to place my short strike anywhere above 162.50. So if I can't get enough premium, if the strikes are all $5 wide and I can't get something, so if we come out here 29 days, I can't get enough premium. We have 500 contracts on the books here. So our bid-ask spread, it was 325 here. Isn't that interesting how it just switched? If I can't get enough premium here, then I'm not even going to place the trade. So at $1, let's call it $1.26. If we add, okay, here's our calculator. So if we say, if we can do $1.23, if we can get $1.23, or let's just call it $1.30. So we can get $1.30, we're risking 370. Is that enough? That's a 35% return. We want it to be at least, and if we're looking at January 10th, at least 29. So that would meet our criteria. And so if we said, okay, we're risking 300 and some, we're only going to do one contract, first trigger sequence, create an opposite order. We want to buy it back when it's worth 26 cents. Does that make sense? Yeah, somebody's saying that Boeing has resumed their production of the 737s. And you can come over here and look at the live news. If I squish my calculator, and we can see what's going on with this company. But if we say, okay, we're going to do one contract, we're going to make our exit good till canceled, confirm and send, and we're going to put this in our short put vertical. And so this is a trend. We're looking at this as a potential trend reversal. And this is a weekly expiration. So we have to be aware of that also. And how much could we lose? 369. How much could we make? 131. Okay. So we've sent that one in. How about this ticker symbol, LYV? So this is Live Nation. So one would assume that this is a consumer discretionary stock. I don't know if it's considered communications. Let's go see. It's considered communications. I don't get to pick which category these go into. I think if I'm buying a ticket for something at an arena or in an amphitheater or something, that's discretionary. But what do I know? So both of these sectors have been strong, and this thing has just been on a tear, and then it's pulled up. And by on a tear, I mean this has gone from, it's gone up by 52%. Since September, even with this pullback, still up almost 46%. So that's some pretty aggressive movement. And then it's come down here. We're on the other side of earnings where it gapped up. And then it's come down to this kind of support level and is moving to the upside. We had this Harami pattern a couple of days ago, and now it's continuing to move up. So could we sell something below 133? Well, when we come to the trade tab, this only trades monthly. So that can be concerning. So does this, trade more than 1 million shares a day? Well, if we're at 564, we're a couple of hours to market close. We've got hundreds of contracts here. We've got a tight bid-ask spread. So we might say, well, that's okay. And we want it to be where? We want it to be below 133. It's trading at 135. And again, our only choice is these $5 wide. So can I get enough premium if I sell the 130? Whoops. So sell. Oh, now I can get $1. But I can get $1 and I'd be in this for 36 days. And, my math skills are not all that in a bag of chips, but I know that 1 divided by 4 is 0.25. And so it doesn't meet that minimum requirement. We need it to be at least 36. So you might say, looks good, but this is a rule I don't want to break. And so next. And it's okay sometimes to say no. Okay. How did I get 26 cents for the buyback? Good question. Let's go look at it. So we placed, let's come by the time placed. Where am I here? Their working orders. We did a trade on Boeing. So let me just come over here. So Boeing, the way I got the 26 was I took this $1.31, and in my head I said if I was buying it back when I had 90% of my max gain, that'd be 13 cents. So I doubled it. Or you can come over to your calculator and say, if I'm paying $1.31 and I want to exit when I've got 80% of my max gain, which means I'd have 20% left over, that would come to that 26 cents. Okay. Now, this hasn't filled yet because I'm saying I want $1.31 and they now only want to pay $1.23. So I'm going to come here, cancel and replace it and say, okay, $1.23, be like that. Then maybe we can get in for $1.25. And that's our short put vertical. There we go. Okay. So let's look at Apple now. Now, Apple, it's interesting with Apple because, this is up 28%. It's spent a bunch of time consolidating, and if we're looking at this, we could say, well, here's a cup and handle pattern. So as a technician, I might assume that if this range is $38, that it might, go up by $38. And we had a 1-day pullback here. But when we look at this thing recently, 1-day pullback, 1-day pullback, 1-day pullback, 1-day pullback. We may only get 1 day. So could we come out here and if we draw our little line, say, it's in the tech sector, it's bullish. Could we come out and sell something like the 245 or below? We're on the other side of earnings. So, if we came out in this 3 to 4 week time frame and said, and again, we wanted to be below that 245 level, could we sell the 240 and get enough premium? 245 is a little more aggressive. And, we've got $3 worth of wiggle room, but we've only got $3 worth of wiggle room. And we want our delta to be somewhere between 20 and 40. So we're looking at the 240 or the 245. So if we said, okay, if we looked at this 245, we'd get $1.30. So, and again, coming back to our calculator, $1.30, this is almost exactly the same as the last one, divided by 370. That's a 35% return for something that we might be in for up to 29 days. And so if we're okay with that, single order, first trigger sequence, right click, opposite order, we're going to make this 26, going through that same math process that we did the last time. Good till cancel, confirm and send, short put vertical. So this is a trend continuation pattern as opposed to the trend reversal on Boeing. Yes, somebody's saying, do you like Boeing because it matches your initials? I have a shirt actually that has a B and an A on it. Maybe I'll wear it for you tomorrow. We'll see. And and I bought it at a cool boutique in the Detroit McNamara, like the beautiful Detroit airport. Yeah, I have a friend that's one of her favorite stores, and the only place it exists, at least in the state of Michigan, is in the airport, believe it or not. Okay, so where are we? So we've done Apple. Would you like to do one more? Can we do one more and then we can go and do, we'll go and do some trade management. Let me get rid of that. Not totally on my A game today, I gotta say. I woke up yesterday and my voice has improved dramatically yesterday. I basically had no voice at all. So here we have Shopify. So Shopify up 48%. You could go only 48%, but it's up 48% year to date. But since it hit this low back here in August, it's got to have doubled in price, right? Yeah, it's up to 120. So it's more than doubled. It's up 140%. That's insane. But could we look at this and say, I wonder if this has higher volatility? I mean, this is $100, and $15 stock that tends to move about $4 in an average day, or at least has done that. Could we get down to this 110 and sell something at 110? Well, let's go see. So if we come out here this 29 days, this is a higher volatility stock. And we have single options. And if we look at this weekly, we've got 79 contracts. We've got a bid-ask spread that's about 10 cents. So that's around 5%. That meets our criteria. It's traded over 4 million shares a day. So if you go and if you're new to this, if you watch that little mini session on the example trading plan, it would meet all of those criteria. The last one is, are we going to get enough juice for it to be worth the squeeze? And if we look at this 110, so 110, 109, well, we might be willing to say, what if we did the 110, 105? Well, we're just getting 98 cents, 99 cents. Like, yeah, we want it to be 29%. This is not quite 25. So that doesn't cut the mustard. So do we come out here and say, okay, well, could we do the 111? Because we do have dollar-wide strikes. And but we've only got 6 contracts there. So if we come here, we've got 80 contracts that were traded today on this. We've got a 30% probability of this being in the money, which means we've got a 70% chance of that expiring worthless. So could we sell a vertical here? And we don't have to make it $5 wide. Could we make it $2 wide? We get 52 cents. So here we're now out 22 days and we can potentially make 52, which means we're risking $2 minus 52 or 148. So that's a 35% return for a trade would be in 22 days. And so if we look at that and we think, oh, well, that meets our criteria. And so how many of these could we do? Well, if we did 3, we'd be risking about $450, right? 444. What's the most we can make? 156. And this is a base hit strategy. Yeah, somebody's saying you have Shopify in the other class. So let's just come and look at our monitor tab. We don't have a short put vertical on Shopify right now. Okay, so we're going to go ahead and we're going to put that one in. We're going to do 3 contracts, single order, first trigger sequence, right click, opposite order. And this is another kind of bullish trend continuation, entry. We're going to put that in our short put vertical group. There we go. Now, trade management is an important part. It's just as important as having, being buttoned down on when you enter a trade. So if we come out here to our monitor tab, we can see like we have a whole pile here of short put vertical trades. And maybe like the kids are in the car or your spouse is like impatiently tapping the counter and saying, hey, we're going out, shopping or whatever. So what are we looking for here? We're looking for something that's down drastically. Well, we don't have anything down drastically right now. Shopify, we just entered, so that's down a smidge. American Express, down 2%. We're down $1.50. But we might want to look at this Amazon. Now, why Amazon? So what am I seeing when I look at this at first glance, and what am I looking for? Well, what I'm looking for, remember, our target is to get out if we've made 80%. We're at 75. And then today, this number's in the red. It's like, ooh, so maybe we ought to go look at the chart. Okay? Because we're close to hitting our goal. And we don't want to risk, was this one American Express? We don't want to risk snatching, defeat. Let me just see which one that was again. Yes, it's Amazon. We don't want to risk snatching defeat from the jaws of victory. So let's come in and look at this just up close and personal. So we had a long call vertical, our short put vertical, oh, it was Amazon. So we're here, and today we have this inside day. This is considered a bearish harami. Now, this candle is still live, but it's saying that this current uptrend, it may be coming to a close. And so we could say to ourselves, you know what, self, a 75% gain on this, that is good enough. We're going to take it. And so I'm going to come up here to my position on Amazon. I'm going to sort, these are sorted by alphabetically. I'm going to say we were intending to get out when it was worth 20 cents, 27, good enough. Cancel and replace. I'm going to unlock it saying 27, confirm and send. We're going to exit that position. Now there's one other one in this group. And this is how quickly you can look at 10 different positions, or however many we have, 3, 6, well, we've got 9. Here, this one's up 68%, and we've got a little pullback here happening, and that's on Microsoft. And so we might just say, do we say, oh, it was on Microsoft? Well, that's interesting because it's up today. And we're at 68% on this. You might say, hey, this is continuing to uptrend. We had placed a long call on this also. Here's our short vertical. We're miles away. Now, that isn't to say that it couldn't come back and go right through these, but for now, we'll just leave that one on. So guys, that's a wrap for this one. I mentioned following me on X a little bit earlier. And if you haven't done that, once again, Kevin and I invite you to follow us. And I just wanted to point out that we have some new webcasts coming. Okay. And if I'm going to fill in for someone, I'll post something with a GIF, a crazy caption to get your attention. I am going to be filling in tomorrow for advanced options at 2:00 Eastern. So I'll post something on that. But there's a new schedule coming, and we've got 5 new classes coming, one on swing trading, one on trading index options, which I think will be exciting, trading price patterns. And this just isn't short-term trading. I'm going to be teaching this. I'm going to have both a smaller account, with maybe 25,000 in it to start the year, and then a large account, maybe with $1 million in it. And let's pretend we've inherited $1 million. And we want to do both longer term investments and shorter term based on trading price patterns. And the same thing with after hours trading. I attended as a client a class years ago called the 4-Day Live, which had a lot of specific trading plans geared to after hours trading. So I'm looking forward to sharing that with you. So this will be my new schedule come January. I'll be teaching every day. And 2 of those new classes I'll be teaching, and then short verticals will be handled by someone else. We will still trade short verticals in the trading a smaller account and maybe in the price pattern class. But getting started with technical analysis, Cameron May and I are going to do a switch. He's going to teach getting started with options, and I'm going to start doing technical analysis. And I'm really jazzed about that because I love looking at the charts and seeing the stories that these charts tell. So that's a wrap for today. We actually, did a lot in this class, right? We did we did trades on 4 different stocks. Now, I've taught 2 classes today, so you're going to see a lot in there, but we did one on Boeing, we did one on Amazon, we did one on Shopify, and we did one on Apple as well. So those were the 4 trades that we placed again. One of them was and then we did an earnings trade, a short call vertical. So we'll see. I'm feeling angsty about that one. So we'll see how these all play out. We'll follow up in future classes. Please hit the like button before you leave. It helps move this up in the algorithm so that more people can find this content. Please subscribe to the channel. And I've already talked about following us in the land of Twitter. If you thank you. Who's up next? It's Connie Hill with long options. Sorry, guys. Like I said, I'm not on my A game today. You'll want to stick around for that. Thanks for joining us today. Have an awesome day. Thanks to Kevin and the guys behind the scenes for helping me out with this. Take care, everyone. Bye for now.